right, happy Sunday, traders. This is SageFT from the live trading desk coming at you with a review and Rev-UP, or Rev-UP and review, however you want to look at it. We're going to fire you up. I hope your team's winning. First thing that I'd like you to do is go ahead and hit that like button, subscribe button if you haven't already. Make sure your notifications are turned on and that little bell icon down there so you know when we're posting, you know when we're live. All right, let's get right into this. First of all, I hope everybody had a good week. This week, I think I broke even. I'll have to look at it. I don't really pay attention to it a whole lot. I mean, I guess I should a little more than I do. Here's the deal. I learned a lot this week. We'll just say that, right? And what I learned was I'm not here to be right. I'm here to make money, right? And so with that thought, let's just keep pondering that as we look at the daily chart here and look at how it defies gravity. Everybody says, well, this is buy-side liquidity. This is buy-side liquidity. It has to come down. It has to come down. It has to come down. Okay, well, let it tell us when it's supposed to come down. Because as of right now, we are in a very, very nice RBI to the upside, right? We have this green bar that breaks all of this congestion here, stops here. And so then this is where our week began last Monday, right? Here's the 23rd. This is Friday. Test, perfect test of this point here. Look at this fair value gap here. This inefficiency has become the absolute magnet of the market. Look, we'll get into that more here in just a minute. But taking a look at the week in the daily glance, and then we'll go into the 4-hour chart. This is very bullish. As I kept saying all week long, this is very bullish. So what we're looking for is where's the point where they're going to pull back on the smaller time frames and give us a chance to ride it up with them. And the next thing I want to remind everyone, we can make this full size. We don't need the average true range on there. I want to remind everyone that we are in first position on our KISS chart. Okay, meaning this is where we want to be trading. We want to wait for it to go narrow state and then for it to go wide state. Here's what we mean by wide state. We have the 220 and 1 simple moving average, and they're in the hierarchical fashion, just like this. This is where we want to trade. Okay, so let's take a look at where we're at. 221 SMA. Here's the 8 EMA for a confirmation. Okay, so let's drill down and let's figure out where this all kicks off, and let's figure out how we're trading it. Here's the 4-hour chart. In the 4-hour chart, what we have here is a low to low trend line sans wick in the middle, right? And the reason I have it there is it's the first line of defense for the longs, right? It's a line of support. Now, obviously, there's another one, and I'll just draw it because I know that's what everybody's looking at in this video as I'm scrolling here. Okay, here's the other one, right? So which one is the real one? Well, you can always zoom out, and there's this one here, and this one here, and this one here, right? So we can draw it here, because here's what we have to understand about these kind of lines. You can draw them all day. You can find a million freaking lines to draw. At some point, you have to say, okay, which line is it, right? Because if we have to have 3 points to intersect, it's here. If we have to have 2 points to intersect, it's here. So let's leave it on the 2-point intersect, right? So now, the hard part about trading on a larger time frame when we're in all-time highs is where does it go to? Okay, so I have a great answer for that. Here's the answer that I've come up with, 6,000. Now, does it come down before it gets to 6,000? Sure, but there's no reason this can't go 1-to-1 risk-reward ratio just like it has every other time. This is the picture of inflation. We have to remember that interest rates, just because they went down half a point, that takes a long time to get through the economy. And why would we cut interest rates when we still have fear of inflation? Did they make a mistake, right? Why did the market rally when they lowered interest rates? Because it's going to spur economic growth? No, it's going to give the big tech companies cheaper money to borrow, because that's how most big tech companies pay payroll, right? Just because they're profitable doesn't mean they use their money. They use someone else's money, and they just have to beat the return. They have to beat the return that they create, has to beat the payment. They're a huge spread bet if you think about it. Okay, so now on the 4-hour chart, here's what we are looking at. This set off the long, okay, and then the RBI is right, it sets up right here, and then it breaks higher here. You can see the line that we have created. This is the line that's drawn on the daily chart. Okay, so now we're long, and the narrative all week long was to watch for pullbacks on the smaller time frames to figure out where they're taking it higher. Now, I'm going to remove this because it could be distorting what we're looking at. Because what I see here on the 4-hour is we are now at the decision point level, right? So between 78 and 85, or wherever we're at now, it has to make a decision. Okay, the low of this bar is 78. Oh, imagine that. Imagine, right? Imagine. What's the close of this one? 78. What's the open of this one? 78. What is this one? What's the high of this one? 79. What's the close of this one? 78. Okay, what's the close of this one? 78. Okay, what's the open of this one? 78. Okay, what's the low of this one? 78. Okay, so you see where we're going with this? When the market opens Sunday night and we're watching into Monday morning, what we're watching for is, what does 78 do, or the lack thereof? Right? So see how we just transitioned all the way into what are we doing next week? Well, it's very, very simple. Let's not make this complicated. 78 is going to print, and we're either going to print this level here, uno más tiempo, okay, or we're just going to go higher. I want to remind everyone, we have all of these points of support or demand, as people would call it, right? Let's go down to the 15-minute chart and let's see what we see. Okay, so there's a million ways that you can draw this using all of the cool rectangles and stuff like that, but we're going to keep it zoomed out because you can just clearly see that what they were looking for was any sort of draw on liquidity possible. And what happened was they just stopped giving it to them, so then they spiked it. Now, they got one chance to get that draw on liquidity, and here it was on the sell side liquidity. They got one chance. Okay, they thought they were getting somewhere. They got one more draw on liquidity. Now, here's where it all changes right here. Here's the draw on liquidity to the buy side. Here's where buy side liquidity got drawn. Now, what we're doing is we're watching, and see, you can see up here, it lines right up with everything that you're thinking that it does when you look at all of your cool little indicator and word things that come up, right? We just need to be zoomed out so we can look at it. Okay, so now 78, right? Because we got the draw on the buy side liquidity twice. Look at this. Okay, remember, we had this drawn out. And remember all of the other cool things that we had. Go back and look at the videos of the week when we were discussing this level right here. Look at how we touched it. Bink! Came through it, sliced through it. We closed above it, and it was supposed to rip, roar, rally. Wrong. Right? They're like, oh, hold on, wait. Our first chance at buy side liquidity. Thank you. Comes down here. Oh, the market's going to collapse now. Oh, we're going back up into highs, right? Because it keeps closing above and below this level right here. Look, this is very important. This is very, very important because watch what happens. Okay, here we go. Yay. We're going to 23 Mancini. We're going to 30 Mancini. Do you remember the narrative? I do. Do you realize how many people just got their teeth cracked and they will never trade again? Right here. Watch this. I'm going to show you this. Right here. Do you realize how many people will never trade again? They lost everything, even the sporty little cap, because what they did is they ignored, we're on the 15-minute, right? And we're coming into Friday on the open here. This is where the whole week was going good, right? They held through the long. They had one chance to get out. They may have even added. They had another chance to get out, and they didn't. So now they, late longs, late week players, have to make a decision. Look, they're forcing their hand. The professional poker player is always putting the pressure on the opponent. 100% of the time, if you leave that bet unopened, he's going to open it if he finds positive expected value. Look, you didn't check raise him, so you left it open and he exploited you. Just think about it like this. Look. So what we're looking at next week, that draws the whole picture for next week. Here's how it works, right? We got a new all-time high liquidity, or liquidity grab, sweep, however you want to look at it, right? Grab. And then it comes right back into these levels here, where this is where it was all supposed to be removed. Okay, so we get almost to here, and they go, I think we're just going to go. The pattern is right here. I know we're getting long in this, but this is really, really good information, right? So you could even go like this, right? You could say, okay, all right. If it goes to the downside, right? If it goes to the downside, we can just go ahead and put it in. Now, here's how I have my thing set up here on the fibs. I'll show you. You put it at the starting point and then find the stop on this fib, right? And what I have here is I have a 1-to-1 risk-reward ratio, a 2-to-1 risk-reward ratio. Now, notice it lines up right down here with this skedaddle here that we had on the 4-hour chart. Okay? So the way that this fib is set up, and I have no problem giving it to you. I have no idea how to give you a drawing tool on this though. But very, very simply put, I have entry, exit, okay? And then I have my 50%, then I have my OTEs. Very, very simple. Very, very simple, okay? And then I have my 1-to-1, 2-to-1 risk-reward ratio. All right, so now what we're looking at is here, well, if we start to slide 57.88, okay, do we go to 57.60, 57.59? So that's where we're going to kind of be looking if this thing goes, because I see this right here is very bearish if this starts to break. Okay, so that's what we're going to be looking at next week. That's going to be the review of last week. Go ahead and hit that subscribe button if you haven't already. Hit the like button. Make sure your notifications are on. This is SageFT from the live trading desk, Monday through Friday, 8 a.m. to noon. I hope you enjoy this content. If you go back and look at the last 10 of these, we have been right. Now, no, not as in like, look at me, we've been right. But what we've done is we've mapped out everything, right? Now, you're probably thinking, well, yeah, but Rev, you say two different things. Yeah, you have to have two different plans. We can't just assume that this is going to go straight down, because what if it doesn't? You're going to short, and this is going to keep moving up and against you, and you're going to short it. So then you have the wrong plan. Right? So what we do is we had to build two different plans. If all of this turns back around to the upside, we're going to all-time highs. It's 58.30, 58.23, 58.10, okay? Easily. Those are very easy to find above us. Those are easy levels to find above us. With that being said, I'll see everybody tomorrow morning, 8 a.m. live on YouTube. Thanks. Good night.